Breaking news on the Fed. Steve Leisman has the details. Hi, Steve.
Thanks very much. The Fed's balance sheet actually declined this week after several weeks of increasing in response to the banking turmoil that's been out there. It was down by $28 billion, still around $8.6 trillion, pretty large, and the reversal of the quantitative tightening remains in place. Here's what happened. There was a reduction in lending at the discount window. It was down by $22 billion, and I'll give you the actual figure of lending that was there. It was still $88.1 billion, so it was still elevated, but down from before. What happened, though, is they went over to the new bank term funding program in greater amounts. That was up by $10.7 billion, and the bank term funding program was now up to $64.4 billion from $53 billion. So that's the new program where they lend to banks at par for the maturities that are discounted. And that's just about it, Morgan. Other credit extensions, everything else, not much really matters in terms of the total thing. But they're even now. It looks like they're basically not seeing more pressure in the banking system from this release of the central bank's reserve standing. Morgan?
It sounds like we're finally getting data that lines up with what we've heard from the likes of Powell and Yellen in recent days, that there's stabilization now in the banking sector after those several days to, I guess, week plus of just tremendous uncertainty.
Yeah, and I can lay some new data on that too, which is the Investment Company Institute also puts out movement into money market funds, Morgan.
Okay.
That's up by $65.9 billion. It's a new record of $5.2 trillion in money market funds, but the increase is half of what it was. So there's still money moving around. There's still demand for loans and lending from the central bank discount window as well as from the new program. But it looks like at least the crescendo of anxiety that was out in the banking system seems to have crested and is on the way down, but is not completely vanquished from the system right now.
Meantime, earlier today, you did get that White House blueprint, or I'll say, beginnings of a proposal around increased bank regulation on the regional banks. How does all of this come together?
So let me tell you that Janet Yellen is speaking inside here, and her prepared remarks had nothing about this. In fact, I just have to wonder, is there some split now between what the Secretary is saying and what the White House said? Because the Secretary said, there's two reviews going on at the Fed and the FDIC about what actually happened, and those are coming out later. And she said she didn't want to get in front of figuring out what was needed. She did propose some broad outlines of looking at what was happened, what was changed by the Trump administration, and reviewing those. But the White House this afternoon came out with a wholesale, let's roll all that back, and very specific bullet point by bullet point. Now, I don't know if in the time that those prepared remarks came out, if she's in there basically talking about that now and incorporating that detail, but it certainly seemed like the Treasury Secretary wanted to go slower, and the White House seems to be going very fast right now.
Wouldn't you like to be a fly on the wall for those discussions? I'm going to put a quick task to you, Steve, maybe for next week, since we're now watching this weekly balance sheet data. H41. We got to find a sexier term for that when we talk about this on Thursday afternoons. Steve Leisman.
I'm going to get to work right on that.
Okay.
Right on that.
All right. Thank you for breaking down all that data in real time as it has come to us.